Hi students, today we will see how cost sheet is prepared. So cost sheet is a statement consisting of the elements of cost or division of cost, or we can say that cost sheet is a statement wherein the organization structure up the details about the cost incurred in manufacturing a particular product or service. Okay, so with the help of cost sheet, it is possible for the manufacturing concern. I told earlier itself, manufacturing concerns basically focus upon the cost related data compared to the trading concern. Okay, so the intention behind the preparation of the cost sheet is, one thing, the management will be able to take several control measures in order to control the cost. Then secondly, they will be able to fix up the selling price of the product, and thereby they can elaborate or expand or formulate different pricing policies. And not only pricing policy, production policy also can be modified, and with the help of cost sheet it is possible to attain or ascertain the profit of the organization. Similarly, it is possible to make the comparison of the cost. Like there are several objectives or the aim behind the preparation of the cost sheet, because cost sheet conveys or depicts the overall cost incurred in manufacturing a product or service. Okay, so let's see one by one what are the main. I told earlier, cost sheet is the composition of different elements of cost. These elements of cost we already discussed. So the cost can be structured in indirect and direct way depending upon the nature. So the main inclusion is material, labor, expenses. So there will be direct material, direct labor, direct expenses. Similarly, there will be indirect material, indirect labor and indirect expenses. Okay, now come to the point, direct material. What are the direct materials? We can say that those material which are directly charged to the product. That is, for example, for making this pen, we all know that the main raw material will be the ink is required, nib is required, a refill is required. So all those composes the direct part of the material. Okay, but in the production unit, in the factory, we can see that there are some other material which are not directly charged in making this product, or which is not playing the direct role in producing a particular product. For example, for making this pen, we will depend upon machineries. Machines we will depend in the organization to produce this or manufacture a particular product. As far as the pen is concerned, we will depend upon machine. So for running the machine, definitely the organization will have to depend upon the raw materials of running the machine, such as oil, grease and all. Okay, so those oil and grease composes the indirect part of the, or indirect material. Okay, next, direct labor. So the direct labor also, there will be laborers or the workers working in the factory who will be directly engaged in making this pen. Okay, so for them, of course the manufacturing concern will be paying wages. That is a labor cost. Okay, so when to those workers or the laborers, when we make the payment of wages for making or directly engage in the production, we say that will be the direct labor. Okay, now indirect labor. Indirect laborers are the workers who will be in the factory, of course, but they are not directly engaged in production, but they may be supervising the task of the direct laborers. Okay, so the supervising staff is doing the work of supervising the work. Okay, if he is not supervising the work, of sometimes there will be delay in the production. So it is because of his task that the organization is able to achieve the target. Okay, so we can say that indirect laborers will be those category of workers who will be engaging, who will be present in the factory, but may not be directly engaged in the production of a particular product. For them also the organization have to pay the salary. Okay, so we can say that those type of workers, when we are making the payment of wage salaries, we can say that they form the indirect laborers, or we pay the money and we call it as the indirect labor cost. Okay, the next element, expenses. Take the same example. When this pen, you can see the several writings on the pen, several designs on the pen. Okay, once the finished product is ready, there is lots of modification made. So this composes the direct expenses. For making this product, the direct expenses involved, we can take it as the modification made. These are for different inks are used, different writing is there, pictures are there. All those composes the direct expenses. Okay, now indirect expenses. In the factory sometimes will have to pay the rent. Then insurance will be there, electricity bill will be there. So all those are indirectly they are helping the factory in making the particular product. So all those expenses composes the indirect expenses. Now all these indirect expenses will be commonly called as overhead. Okay, this overhead can be of three category: factory related overhead, then office and administration overhead, and selling and distribution overhead. Okay, so these are the main costs which will be structured in the cost sheet. Okay, so let's see one by one how we will make the inclusion of particular cost in the cost sheet. Okay, so the cost sheet is very simple. One amount column is required and one particular column wherein you will fill up all the details about the cost. Okay, so firstly all the direct part of the direct cost will be entered in the cost sheet first. Okay, so first we will write raw material. If any opening stock of raw material is there, that is previous year's raw material which has been in the stock, it will be carried forward in the next production time. So that you will carry forward to the current production. So you will write opening raw materials or opening stock of raw materials. Okay, any additional purchase made, you will add up any additional purchases and you will deduct the closing stock of raw material. So you will get the correct raw material consumed. Okay, do one thing, write the amount in the inner column itself. Later on we can transfer to the outer column. Okay, so this is the direct material. Now our direct other costs are direct labor. That also you will add up. Then you will add up the direct expenses. Okay, so all your direct thing is over. So when you add up all the direct cost like direct material, direct labor, direct expenses, you will get the prime cost. This is the prime cost incurred by the manufacturing concern. Okay, so to the prime cost, now you want to take one by one the indirect elements. Indirect elements I told, indirect material, indirect labor and indirect expenses. All together we call it as overhead, and overhead can be classified as factory overhead, administration and office overhead and selling and distribution overhead. So whatever indirect expenses is related with the factory level, we call it as the factory overhead. Okay, and office and administration related expenses, when the organization incur the office and administration level expenses, we call it as office and administration overhead. And after the office and administration overhead comes to the we want to make the sale of the product. So showroom level expenses will be structured in the selling and distribution overhead. So we can now add up the factory level overhead or factory overhead. This factory overhead can be anything: factory rent, factory any depreciation in the building, then factory insurance, electricity bill, etc. So all those will composes the factory level expenses, and you will add up along with the prime cost. Okay, so you will add up with the prime cost, then you will get factory cost. Factory cost. This factory cost can be also called as work cost. Okay, so first you incurred the prime cost, second factory cost or the work cost. So work cost, I am just transferring the work cost, it is continuation. So the work cost, when you add up your office and administration overhead, you will get cost of production. Okay, Now our last part of the indirect cost is selling and distribution overhead. So selling and distribution overhead, when you add up, you will get the total cost or cost of sales. Okay, this is the simple cost sheet. But this is the simple cost sheet wherein you will get the total cost. So it will be easy for the management to determine the selling price of the product. Similarly, they can compare the cost. All those objectives we have stated earlier can be fulfilled with the help of the cost sheet. Now, this is the simple cost sheet. Now, sometimes in the question there will be work in progress, opening stock of work in progress, closing stock of work in progress. Similarly, opening stock of finished goods and closing stock of finished goods. Okay, so all this where you will adjust. Then you will have to make the some changes in the work cost, that is factory level expenses you will get already. Okay, so if any work in progress is given in the question, work in progress are those semi-finished goods. That is, sometimes a product might have to undergo 4 processes. Okay, with the 2 process, it is stopping for the time being, it is stopping and it has been transferring to the next production time. Okay, so in that case there will be previously opening stock of work in progress, that is opening stock of semi-finished goods will be there. So you have to adjust that opening stock of, along with, after adding up the factory level overhead, you want to add up the opening stock of work in progress and you want to deduct the closing work in progress. Okay, after that only you can determine the work cost or the factory cost. This factory cost is also called as the work cost. Okay, so you will adjust the work in progress adjustment along with the factory level expenses or the factory overhead, that is opening stock of work in progress you will add up and you will deduct the closing stock of work in progress and you will get the work cost or the factory cost. Okay, now similarly there will be opening finished goods. It is not necessary that all the organization, once they make production is over, once the output is ready, every output will be ready for, will be sold. There will be stock of finished goods available in the factory, in the stores. Okay, so in that case, while we are preparing the cost sheet, we will have to adjust the finished goods. So in the question you can notice that there will be opening stock of finished goods and closing stock of finished goods. So once you will get, after adding up the office and administration overhead, you will get cost of production. Okay, so along with the cost of production, you want to add up the opening stock of finished goods and you want to deduct the closing stock of finished goods. Okay, so when you will make this adjustment, you will get cost of goods sold. Your COGS, what you have studied in your financial accounting, that is different and this is different. Okay, so when you will make the adjustment with the finished goods opening and closing, you will get the COGS or cost of goods sold. Okay, and along with the cost of goods sold, your usual process, just add up the selling and distribution overhead. Okay, then you will get the final TC or the total cost or the cost of sales. So this is how you will adjust the adjustment of work in progress and finished goods in the cost sheet. Okay, so this is the simple format. While doing one problem you will understand. So just go through the problem. It has been given in the question, preparation of the cost sheet for the period ended 30th August 2011. Okay, so you can see there are, it is directly given raw materials. Here there is no opening and closing raw materials in the question, so you need not include the word opening stock of raw material or closing stock of raw material. Only raw material is given, so we can write raw materials 66,000. So you do one thing, you add up in an inner column 66,000. Then productive plus direct labor. Direct labor, it is given productive wages. For the production work, how much wages is given to the workers, that is called the productive wages. 70,000. Then add direct expenses. It is also directly given in the question. Direct expenses 6,000. Okay, so all this composes the direct element. Nothing is there in the question. You can just go through the question. All direct expenses is included. Rest of them are indirect. Okay, so the total will gives you 1,42,000. Okay, so this 1,42,000 constitute the prime cost. Okay, now what you will do? You got the prime cost. With the prime cost, you will add up the factory overhead. So add factory overhead. I think many expenses are coming under the factory overhead. We can note down one by one. First, factory lighting. Factory lighting. 4,400. Then factory healing 3,000. Then motive power. All this comes in the expenses in the factory. That is why you are including under the factory overhead 8,800. Then haulage. This also expenses related with the factory. You carry the goods and all. So 6,000. Then depreciation is given 3, that is plant and machinery, office building and delivery van. So here as far as the factory is concerned, we are recording the factory overhead. So in the plant only we will be doing the production. So we will take only the depreciation on plant. So you can include depreciation on plant and machinery. Okay, 4,000. Next bad debts, advertising, etc. will belong to the showroom level expenses. So it will come under the selling and distribution overhead. Okay. Next, it is given depreciation, then factory rent and taxes. So factory rent and taxes given in the question 15,000. Okay. Then director's fee. Director's fee. Yes, work, it is specifically given director's fee work as well as director's fee office. So all those expenses indicating office will be recorded in the office overhead. So work cost, since our factory cost is also called as the work cost, you can see director's fees bracket, you can see works. So you will include the director's fees of under the work, that amounts to 2,000 rupees. Okay. Next, your factory cleaning. Factory cleaning, the amount 1,000. Rest we can carry forward. Okay, so factory cleaning, then factory insurance. Factory insurance. Factory insurance amounts to 1,100. Then unproductive wages. Unproductive wages, see, I told the example now. So those who are not directly engaged in the production, okay, like supervisors, those will come under the unproductive wages. So unproductive wages amounts to 21,000. Okay, next come loose factory insurance we recorded. Then loose tools. Since all these belongs to the factory level items, you will record under the factory overhead. So loose tools written off 1,200. Then water supply. Water supply 2,400. Then estimating cost. Estimating cost, how much? 1,600. And factory stationery. Factory stationery 1,500. So almost every factory level expenses we recorded, I guess. So we can add up this factory level expenses. So when you add up the factory overheads together, you will get 73,000. Okay, so now this 73,000 you will have to add up with the prime cost. Then you will get 2,15,000. Okay, this 2,50,000 indicate the factory cost. Okay, is it clear? That is factory expenses. When you add up the factory, all the factory related expenses with the prime cost, you will get factory cost. Okay, I will do one thing. Since the space is very less, I am just rubbing this and adding up the office level expenses here. So we got factory cost 2,15,000. Okay, to 2,15,000 we will add up the office overhead, office and administration overhead. So we can check office and administration overhead. First and foremost, you can see the depreciation of office building. So depreciation of office building, the amount it is given 2,000. Okay, then director's fee. It is also mentioned clearly in the question office. So you will write director's fee 4,000. Then sundry office expenses. Sundry office expenses. See this office level expenses. You must note down one point that office people are they are the administration level. It is because of their decision production is going on and there is no delay in the production and all. Okay, so this expenses we cannot avoid. That is why we are including the office and administration overhead in the cost sheet. Okay, so sundry and office expenses 400. Then office stationery 1,800. Then office insurance 1,000. Then bank charges 100. Then before the bank charges, one legal charges, that also will come under office overhead. So legal charges or legal expenses you can include 800. Then rent and tax of office. Rent and tax of office. How much is the amount? 1,000. Then depreciation, direct fees, office, sundry office expenses, then office stationery, office insurance, bank charges, legal charges, rent and tax of office. So this composes the office level expenses. So when you will add up, you will get, okay. So when you add up this 11,100, you will have to add up this amount with the factory cost, then you will get cost of production. So how much will be cost of production? 2,26,100. Okay, not over. We want to adjust the selling and distribution overhead also. So along with the cost of production, add up the selling and distribution overheads. So add selling and distribution overhead. Cost of production we got. Now to the cost of production, you will add up the selling and distribution overhead. One by one you can see what are the selling and distribution overhead. Firstly you can see bad debts. Bad debts amounts to 200. Then next, delivery, depreciation on plant and machinery, depreciation on office building already adjusted. Now depreciation on delivery van. This delivery van basically concerned with the sales. After the finished, for transferring the finished goods, we depend upon the delivery van. So it will come under the selling and distribution overhead. So depreciation on delivery van amounts to 400. Then advertising charges. Advertising charges. It is given in the question 600. Then sales department, sales manager's commission amounts to 1,000. Then sales department salaries 2,000. Sales department salary 2,000. Then upkeeping of delivery van. Upkeeping of delivery van, that is the maintenance, that is 1400. Then salesman's commission given in the question 3000. Then rent of warehouse, for stocking the goods we depend warehouse now, so rent of warehouse, once the finished goods are ready we will be keeping it in the warehouse, so the rent paid to warehouse 600 rupees. So almost all sales related expenses have been recorded. So when you total up you will get 9200, and once you add up with the cost of production, the selling and distribution overhead, you will get 2,35,300. Okay, this is the cost of sales or the total cost. Okay, so I hope you understood this problem.